It's been some time since I've done one of these get-togethers. Done many over the years. And again, thank you for inviting. So what I was going to share with you all today was some of the candle patterns that made a huge difference in my trading and investing and understanding of how to utilize them. In whatever the time frame is that we're going to focus on, and I'm going to go over that with you. So I'll give you a little history, which Renee has given you some insights into that, which I'll go over a little bit. If you want to email me after the presentation, that's right there, greg@mastertrader.com. So, further ado, let's get going here. So, I believe this is going to make a huge difference in your trading, investing, whatever time frame is that that you're trading in. Over the years, there's probably very little that I did not investigate, try and learn, try in my own trading, and trying to figure out, probably as most of you are here, and of course that's why you're here, to try and learn a method, some insights from the various experts that are presenting here today. And we all, not all, some approach in the same way, but some in very different ways. And my approach has been to make things as simple as possible. So when I look at my charts, there's very little on them. What you're seeing here on this slide, and just let me get a pointer out here. On this slide has many different indicators on there. Some of them I would probably butcher to even pronounce them. But a combination of various indicators coming together provides some type of a system. And it's just something that didn't work for me. There are plenty of profitable traders out there that utilize these type of strategies. It just didn't work for me. So it just became confusing. And the harder I tried to utilize them, or a combination of such, the worse it seemed to get, to the point where it was analysis paralysis for myself. And the light bulb finally went on when I admitted to myself, Greg, you can't figure this out the way others have. It's not for you. So one last try before throwing in the towel. And I'm not one to throw in the towel, but it was, let me just get rid of all the lines on my chart, all the indicators that I had, even ones that I wrote myself, trying to find that holy grail. Got rid of everything and started simplifying things, and as I said, the light bulb started going on. Now, related to our conversation today on candles, there are a lot of different candle combinations and names, which I studied them, as I'm sure you have, and try to figure out why they work, why they don't work, how to utilize them, what do they mean. So as I figured that out, and I'm going to explain to you, and of course as an educator, my approach is to make things clear and simple. So what I'm going to cover here in a step-by-step presentation with you is what's the foundation of all types of trading and investing, the candle patterns that we want to look at when prices are trending, a momentum move, which was a big thing for me, because when I started, which was many years ago, I'll go over that with you in a second, the whole approach was pullbacks or retracements within a trend. And I can't tell you how many times my frustration level was so heightened because I got left behind. So one of the patterns that I finally figured out how to utilize efficiently was, well, here's a momentum move, and this type of moves, they historically don't pull back, so how am I going to get on board? That was the question I asked myself, and what I'll share with you. Combining multiple time frames, I think this is the biggest concept to understand as a trader or investor, is how to utilize multiple time frames together. It will increase your accuracy exponentially by doing that. And that doesn't mean to be looking at 10 different time frames. It's about understanding essentially 2 time frames and how to put them together based on your own trading time frame. And a candlestick pattern. When's the move done? When does the pattern tell me when this move is over? Short term, possibly long term, which is related to the time frame that we're using. So a little bit about myself, which Renee's already covered a little bit. I started, trading, if you can call it trading. It was more of a interest in the market that was more or less gambling. So when I use the term trading, I like to talk about some type of an intelligent approach that has a method, which I did not back then in the late 80s. And I started educating myself. I founded Pristine Trading in 1994, and it, as an education company, exploded, and it was being in the right place at the right time. The beginning of the internet was at that time where people were able to access it, not the beginning of it, but were able to access it, and we at the time were really one of the first educating. And I created, what's referred to as the Pristine method of trading back then. You can see several books that I've written on this slide. And as Renee mentioned, I've won 6 live trading challenges, and that's with real money, and those were at Traders Expos that I used to go to every one. And actually, I'm going to show you a slide from many years ago. You might laugh, you might find it interesting, but I found a picture of one of those expos. And I've educated fund managers, market makers, specialists, as I said, traders and investors. Students of mine run education companies today. They run trading firms. They have gone on to create their own companies, successful companies, and educating individuals themselves. A lot of them focus on gap trading, which is probably one of the most popular types of trading for those trading intraday today, to trade the first hour or so in the market. A lot of focus on that. I sold a method that I created 20 years ago to a firm that utilizes it today in their own education, my education that they're teaching on their own. And I continue to educate traders today and investors. So here's the picture 20 years ago, just about 20 years ago, at a Traders Expo, teaching training, trading, and technology at that time. And this was a booth at the Traders Expo. I don't remember if it was the first one or the second one, but a little nostalgia there at the Pristine booth, and you can see the old logo or icon at the top there with the dove pulling the ticker tape. That was the first logo at the time. So a little history about myself and where things have come from. Disclaimer: you all know you can lose money doing this, and in a humorous way, I like to say, if you haven't lost any money yet, you probably haven't started trading, which increases the need for education and a trading plan to do this successfully. So what I teach and have taught students for over 20 years is to build a thought process for your analysis. As you approach trading and investing from a technical point of view, how you interpret the chart creates a thought process. So what we need to do is to break down individual pieces of that chart, understand it, define it, and then put it back together in a systematic way. So I want to determine what I call reference points, and we all refer to support. And when I talk about support, I talk about an area of demand, meaning this is where buyers are. This is where buyers are going to step up. I like to associate reference points on a chart with common sense or meaningful understandings of the word. So as prices pull back to support, there's demand, there's going to be buyers. Depending on what the trend is it up, down, or sideways? Do I want to be a buyer or do I want to be a seller? I might want to stand aside. I want to determine if there's a void. And this is a term that I came up with many years ago to explain to students. There is no support or resistance. And you say, well, how could there be no support or resistance, Greg? Well, it says I'm going to show you. But when that is the case, the odds of a trending move or a larger move, the odds increase tremendously. And I want to look for situations where there is a tradable void, because obviously it means I'm going to make more money based on that setup. I'm going to determine what that candlestick pattern means. As I said, it's a thought process. So every candlestick pattern is going to create a thought. And is that thought in alignment with the trend? And do I want to take a position? Because I want to determine if that price pattern is aligned with my bias. And it's a step-by-step systematic approach of putting the pieces together to formulate a plan and then to place a trade, of course. So I want to keep it simple. I don't want to make it complicated. As I said, I removed all the indicators many years ago, which included trend lines, Fibonacci lines, and even the more esoteric Elliott waves, and so on and so forth. The simpler it is, the easier it is to interpret and make decisions. And honestly, these things aren't necessary to determine where buyers and sellers are. So what we want to do, and this is basics, which probably a lot of you have already heard, support and resistance are levels. And there's an important point. They're not fixed areas. One of the hurdles that I had to overcome in my thinking about technical analysis is that these things are not fixed. So when you look at things such as Fibonacci levels, it can create a belief that these levels are so pinpoint exact, and sometimes you see examples where they are, and it creates a belief that, hey, it has to stop right there. And it doesn't. It's an area. Buyers and sellers push against each other. They're flexible areas, but it's a spot to take note of, that this is where buyers should step up at support and sellers should step up at resistance. And support, when it's broken, that area becomes resistance. Simple but true. Resistance, when it's broken, will become an area of support. So in an uptrend, right, this high right here, which was resistance, even though it's in an uptrend, prices pulled back from it and they made a higher low, and then we were able to overcome that resistance area, make a higher high, a higher low, and we look for the pullback to that area where buyers are going to step up and form a buy setup there. And in the sideways trend, those areas do this, that, they're going sideways, and they're defined areas. One thing take note of, I don't think I have a chart of it in this presentation, but we want to see sizable moves in the sideways area, not overlapping bars. That's just confusion. But when you form a channel such as this, we can trade, within that channel, the highs and the lows. In a downtrend, you say it was support, but it did bounce, moved up, broke down, retested it. This is where, we call it a minor resistance. The prior high is major resistance. So this is where retracement concepts come into play, not fib levels. Right? Retracement concepts, retracements to support. Now, it says here, a move to major resistance or major support puts the trend in question. So what does that mean? Well, just from a very, simple understanding of retracements, if this is the prior low, if prices move beyond minor support and go all the way down to major support, it's a deep pullback. So a Fibonacci, utilizer would say, hey, it moved beyond the 0.618 retracement level. right, where I want it to be a buyer, so that's a negative. Well, it's just a line on your chart, that 0.618. So from my, method, if it pulls all the way back down to that major support level, it's pulled back too far. I still might consider being a buyer since it's support, and that's where the demand is going to be. But it's a deep pullback, and the odds of exceeding the prior high are lower. Common sense. Right. So what is this void that I've termed, and what does it mean? Well, it's just simply, and here's the definition, it's defined as a price structure, the chart you're looking at, where gaps or rapid price movement have occurred. End time. In other words, prices have moved so fast, either through that rapid price movement or a gap, there's nothing there to the left to stop prices from moving. So there's formed little to no reference points of support or resistance. Now, that can happen in several ways. As a gap or rapid price movement, if it is just that gap and it begins to turn, or a rapid price move down and forms a V bottom or a V top, what we call climactic buy and sell patterns, those are quick counter trend moves against the trend. I recognize it as such, and if I'm going to trade a climactic type of pattern, I don't have a expectation for a large move. As opposed to that same rapid price movement or gap with time, meaning it's gone sideways, forms W bottoms or tops, head and shoulder patterns, right? Bottoms or tops. There's been a move through time which has created a larger area of support or resistance, or we just call basing. It's just, or it can be basing over a long, after an uptrend or downtrend. It's that simple. Right? So the larger the void, the greater the odds of a larger move. So let's look at an example of that. This, by the way, this is an actual recommendation that we put out in our Trade of the Week a week ago. I believe it was a week ago. And this was the thought process at the time. You have a daily and a weekly chart. Unfortunately, I didn't catch it down here, but it was already had moved up. But I have a weekly chart where prices move down rapidly and move sideways over several months, then moved higher, and it's created this void, rapid price movement, time movement, sideways over time, and now the potential to move up toward these prior highs. So moving down to the daily time frame, this is what all of this congestion looks like. And here's the void, the move up, here's the pullback, and here is a continuation pattern which I'm going to show you in a minute, and why I picked it to actually give it a recommendation. We'll take a look at this again at the end of the presentation. Now, master trader's mindset. So I relate all technical patterns rather than looking at them through an interpretation of things such as a MACD or a momentum oscillator or stochastics and such. Say, well, these are price patterns that reflect other traders' thoughts. What were they thinking? What are they thinking? So a simple way to look at that is, well, if prices are in an uptrend, where prices are moving in a fluid way, there's a lot of confidence amongst traders. Bulls are in charge. The expectation is for higher prices. The expectation is to buy on pullbacks and that prices will go higher. So these patterns guide our thoughts and our actions. These price patterns, they define buyers and sellers' confidence or uncertainty. And as I mentioned it before, if you have a lot of candles that are overlapping each other, maybe there's a lot of gaps, that's uncertainty, that is confusion, that is a chart that displays the majority just don't know. Right? So they're just taking their positions based on their beliefs, which people always do, but there's no consensus among buyers and sellers to one or the other to take charge and push prices in a trending way. So if the price, the trend and where those patterns are going to form are going to increase the odds of follow through or the lack thereof. And this last point could be one of the biggest things that you can take away from any presentation today, is that regardless of your method or approach, if you don't have money management, plan to incorporate with that, there's just no way you're going to win in the long term. Because you're going to have large swings. You may make a large amount of money one day. You may lose all your money the next day or over a short period of time. But this money management is going to influence your psychology. And if you have any doubt of that, just increase your position size where the risk of disaster is there, and you'll feel it. So when you start putting these together, this is where your confidence, patience, discipline, all the things that you've been told are required to be successful, can come into play and come together, and you can actually do that. I don't know if there's any questions, Renee, but if there are, I'm not familiar with how to see them in this software, so I'm just going to continue here. So some basics on candles. And as I said, I keep it really simple. A green candle, and that individual candle is a lot more to it, of course. I say, buyers are in control. Bulls win. A red candle, the bears win. Now, of course, I have to take into consideration where that happened, the size of that green or red candle. But at this point, it's basic, keeping it simple. A candle with a small candle body, where the opens and closes are next to each other, whether the tail is on the bottom or up in above and down below, I just look at that as momentum is slowing down. I don't care what you call it, whether it's a long-legged doji or a spinning top or whatever else the terminology is. None of those terms mean anything to me because I don't think about them. I just a really simple: buyers in control, momentum is slowing, bears in control. Where's the trend? Where are these patterns forming? Now, topping tail, what does that mean? Well, sellers have taken control. I say, what did it look like before it became a topping tail? Of course, the reason why I put them below the green candle. And this is where retracements come into play, and how you start thinking of, or should start thinking about, retracements. And this candle was green and buyers were pushing it up, and now all of a sudden it's got this big tail on the top. Well, obviously buyers were in control, pushing prices higher, and all of a sudden sellers came in and pushed prices all the way back down. Now, whether it's green or whether it's red, red is a little bit more bearish, closed below its open, but buyers have lost control. The next step is for us to be looking at where these candles are forming and the trend, which of course we're going to get to. Bottoming tail bar was a red candle. Now it's got a tail on the bottom, suggesting it's going to go higher. The next step, where is it happening? Now here's a key point, and I hope that this is something that helps clear up any confusion about candle patterns. So here I've got a one candle, right, topping tail or bottoming tail, a two-bar reversal, green turn to red, and a three-bar reversal. So that this might be called, what do they call these? An evening star possibly, or a morning star, and all of these names, and then the candle gurus get into, well, what is the odds of a turn based on the candle pattern and so on. Well, I can make any candle pattern look like something else by just changing the time frame. So this three-bar reversal could look like a bottoming tail bar depending on the time frame. So the key here is to understand a key concept, that the messages are the same. It's about understanding retracements and the difference in time frame. So one of the hang-ups that I had at the beginning trying to figure this out was I always looked for the bottoming tail bar, the topping tail bar, because my belief was that that was the strongest candle. And then as I missed trades because I didn't see the candle that I wanted, I came to the realization that these are all the same thing depending on the time frame. One of the other hurdles was thinking that I need to look at all of these other time frames to see the pattern I wanted, which again led to the analysis paralysis. Too much information. Okay. So now here we have very simple patterns. However it forms, it's a picture of selling. And don't get caught up in the topping tail or whether it's the two-bar reversal, whatever the name is. These are pictures of selling. These are pictures of buying. The location of those pictures are key. This setup right here, depending on the trend, if it was happening in an uptrend, I would actually look at this to fail, and that failure to be a buy setup. However, when it's in a downtrend, I look for those pictures in this area of minor support, and I look to get on board. I don't need to know retracement levels, is it at the 50% or the 0.618 or any other fantasy that we might come up with, or a trend line. It's in where the sellers are, where the supply is, and I look for that picture to get on board, right? And vice versa in an uptrend. So here's an example of real chart, right, and how I would utilize this. Well, here's a pullback to an area. Someone said there's no sound. Hopefully others can hear. Okay, great. A pullback to that area of major support. Now, as I said, the retracement is large, and if you saw prices coming down like this sharply, I don't want any part of that. It gapped down from a high, a big bar down, big volume, so on and so forth. However, it's in an area of support. Now, I would not take the position here. However, on a retest, which is what I call a little minor breakdown failure, which turns into a shakeout, which over some time creates this void, well, now I'm interested, and just take note of right here, I don't have it marked up, but this is one of my continuation patterns, which I'm going to show you right here. So my expectation here is, well, if it gets above this area, I'm interested. But in this case, it gapped above and it went. And now it's up into resistance, so I'm not going to buy it here. But this little retracement here, in combination with what I've said, gives me an entry point. Here's another pullback. Getting ready. Multiple time frame analysis here in a smaller time frame. I would love to set up it for an intraday point of view. But again, the same thing. Resistance, pullback, support, little choppy action, pullback to minor support, and as more confidence comes into a stock or a market, the pullbacks become shallower, minor support, higher low, and so on. Last point there, make sure I cover. Major support, I've defined that for you. Until that's broken, it's in an uptrend. I don't care if it breaks a trend line or any other line you're going to put on your chart. Until it breaks major support, it's a black and white definition, that trend is up. So here's my continuation pattern. Starts with a momentum move, wide range bar, WRB, wide range bar, starting the move up, momentum move higher, creates that void below. How am I going to get on board? This is one of those things I always missed many years ago. Well, these kind of correction bars, as I call them, this bottoming tail, it took out the low, bottoming tail bar, buy it above the high. Little smaller consolidation, wide range bar up, inside bar. Key point here, folks, break below the low of 1 or 2 bars. I want to see that happen because what it tells me is that there was some type of a breakdown in a smaller time frame, and buyers step back up again. So I don't know what you're pointing to. Let me see if I can choose the pen color. What's a pen? You know what? I can use maybe an arrow. How's that? Here's an arrow. Maybe that would work better for you. I know it's gray. Choose color. Let's make it blue. No, that didn't work. Sorry about that. Sorry about that. Hopefully you can see that and that's working a little better. But that bottoming tail bar was a breakdown in the smaller time frame, and buyers stepped back up, took control, demand, pushed higher, and it's in the context of this momentum igniting bar. And of course I'm going to make sure, right, there's that void concept up above to get on board. Oh, that actually puts, that's cool. That actually puts the arrow right on the chart there for me. That's a nice little feature. And there's a wide range bar igniting. All right. Now, let's get the arrow out here again. Patterns are universal. They occur in all time frames. Now, how do I put that together, of course, is the key, because as we all know, we've all taken certain patterns that we believed would go up or down, and they stop us out. So patterns can fail, but when you have multiple time frame alignment, support and resistance in alignment, you have voids, as I've explained there, the odds of continuation are much greater. So here, as a point, here's a 5-minute chart. Here was a rapid move down, right, that is creating a void, and then a sideways movement over time. So what has happened here, rapid movement, time created, right, this big void. Now, that's fantastic, Greg, right? But how did you get on board here? It gapped up and went. So this, and now as it comes up into resistance, I don't want to enter here, so I need a correction. And I said, these igniting bars and these patterns, they typically don't pull back very much. So I utilize my correction bar strategy. As it pulled back a bit and it breaks down and recovers, that's my entry point. This bigger picture analysis, and it depends on your time frame. If we were looking at a weekly chart, I'd have a much bigger expectation of a move. But right now we're looking at a 5-minute chart. This would be an intraday type of expectation and strategy, but I'm looking for a bigger move higher because of my bigger picture expectations or analysis. So there's my entry point. My stop would be below here, and then I just continue my analysis. And it's moving up. As it makes a higher high, where's my major support, where's my minor support? And then here it's like, well, wow, now it's really taken off here. It begins to create a void, and so, well, this is a little bit too far, too fast, rapid price movement. So here you had some uncertainty. Buyers were in control, but some uncertainty, right? Some sideways action. I'm not so sure it's going to continue higher. Well, it moves up, and then buyers come in. It holds support. I love this pattern right here. Is a little continuation pattern right there. Wide range bar up, inside bar, back up. And take note of that topping tail. Totally ignored. Key concept. Ignoring a bearish bar. It is an uptrend, but that's your uptrend confirmation bar. And then prices just, they just continued higher. A little bit too much. Too fast. Now, how do we erase all of this? Erase all drawings. There we go. Now here's the same chart on a 15-minute time frame. Here's your 15-minute. Same thing. And what I want to point out to you here is the wide range bar after trending, that was your 5-minute chart that continued higher very rapidly, suggests that the move at short term is over. The uptrend is not over. But on a short-term basis, right, we're looking at a 15-minute chart. Like, well, this was the area of our entry point on the 5-minute. It pulled back to minor support. It continued higher, wide range bar. It's time to take the money. Take the money. So a wide range bar after a trending move signals that the trend is near over. It's not over unless it breaks major support. course, that's your deep retracement. If that was to happen, retraces too far and breaks the uptrend. Now, if you were drawing trend lines and it breaks, that doesn't violate any support. And let's erase this again. Erase. The pullback into minor support should be where those buyers step up again. But one of the things is, what's over here? Now, I can see it was near the end of the day, but I would look over here to see, did this close a bigger void? Something that you'd want to take a look at. All right. Some of the testimonials or accolades that gotten over the years from various students that have taken classes with me, that have gone on to become master traders. And obviously you can too. It's about learning a method, one that you believe in, and for me it comes down to common sense. Does the method ring true to just having common sense? And for me, that means not a bunch of squiggly lines on a chart that are trying to, I'm trying to make an interpretation of. It's about using the concepts that I've spoken to you about and putting them together in a systematic way. Now I want to go back to this chart here. I want to try to keep to my time slot here. This is the same chart with that move down. Now, wide range bar coming off of a low. That's an igniting bar. Little breakdown and a move up. I expect buyers to be down here, so I move down to a smaller time frame. In other words, sometimes I want to take an X-ray into a higher time frame and look into a smaller time frame. I'm at my major support, and now I'm looking at these candles that are forming at this time. Remember, I told you, candles with little candle bodies tell me that momentum is slowing. Look at the size of this bar, wide range bar, after prices have moved down into an area of major support. Momentum begins to slow down, and a bottoming tail bar. There's my buy setup with a stop under these lows at that time. Another strategy, one that we utilize a lot in a situation like this, would be an options trade, looking to sell a put-call spread, taking some money. Because of the deep retracement, you might say, well, Greg, I'm not so anxious to buy that. Well, you got a bottoming pattern with a weekly chart like this. You could sell a put-call spread and take in that premium and put some money in your pocket. And as long as it went up with it like this, you're going to get to keep that money, of course. Now, as I said, this was one of our Trade of the Week selections at this time because of this bigger picture and weekly time frame with an expectation that prices would be able to come up here. And if you go to the site and click on Trade of the Week, you'll actually see the recommendation and many of our advisory letters that are there right now. You just sign into the site, and you could view everything that we have there. Let's erase this. Erase this. So a little bit about Master Trader. This is our new company that I formed with my long-term friend and Dan, that was actually the options specialist at Pristine when I had that company at that time, and we've come together to form Master Trader. And in our advisory letters, we review the broader market sectors of interest. Those of you that know me from the past, I'm a big user of market internals for market timing, because when the market internals are in alignment with the bias, we're going to get big moves, right? So some of you may be focused primarily on day trading, but I do that, even of course to this day, but I really like when my internals come into alignment in a market such as this in an uptrend, that I know that the trend is going to continue and the moves are going to be even bigger. So we'll be doing seminars, obviously webinars such as this. You can contact me or get some of my posts on Twitter or StockTwits. Read the website. We're starting to build clients with larger portfolios and with hedge funds as well, helping them manage their positions, what option trades. And if you will email either myself or Dan, we'll be happy to give you the free ebook to learn about generating monthly income selling covered calls, which is, again, another large part of what we do here with our own positions. So with that being said, if there's any questions, I'm closing in on the end of my time. And if you do have questions, again, you just email me, greg@mastertrader.com, and I will certainly get back to you. That being said, I am at the end of my time, and I don't want to hold up the next presenter. I hope you've enjoyed this. And by the way, if you want a PDF of this presentation for your review, email me, and I'm happy to send it to you.